Let's think this through. Gold is often hailed as a reliable hedge against inflation. But is it really? As of late, at least here in September of 2024, the financial media has breathlessly informed us that the price of gold has broken through to new all-time highs. That is, of course, a true statement, as gold's traded above $2,550 an ounce recently, and then correlate that with the inflation that we've experienced over the last few years, and certainly it would seem like gold is indeed an inflation hedge. Now, the decade of the 1970s also represented a period of high inflation, and the price of gold at that point in time also had a dramatic surge. In fact, the price of gold reached record highs back then of $850 plus an ounce in the first couple of months of 1980. And the quick math then for the price of gold going from $850 to $2,550, that equates to a factor of 3 times or 3x over that time frame since 1980. Now, I'm not trying to perform an exhaustive statistical analysis here, but compare that 3x change in gold price to the approximate 4x change in the consumer price index over that same time frame. And from that perspective, gold wasn't a very good hedge from one record price to another. So if gold really isn't a very good inflation hedge, what is? Well, since the early 1980s, when the gold price increased 3x and the CPI increased 4x, the collective price of a well-diversified portfolio of great companies like those represented in the S&P 500 increased at 49x. It's more than 10 times the rate of inflation. And just to be fair to the price of gold, when comparing it to a price increase of the S&P 500 index, I am ignoring the 44 years of dividends received from those companies because, well, gold doesn't pay any dividends, doesn't pay any interest or anything else for that matter. So to summarize, the most consistently effective inflation hedge, no, it's really a long-term inflation killer, is a broadly diversified portfolio of great companies in America. So then, quit watching stock price. Instead, watch the earnings of those companies and the amount of those earnings distributed to the owners in the form of dividends. And if you want to see something that rarely, very rarely, ever goes down, graph those dividends received over time. Be an owner. Think about it. If you want common sense, follow me.